Hello, good morning, everybody. This is Dane Candy, the CEO of Cork Cyber, and welcome to our fireside chat. I am so excited today. It's not often I get to invite both thought leaders and friends to a feisty conversation. This one in particular, I get to have people who are much smarter than I am, which sometimes is a lower bar. This one in particular, though, is really cool because these gentlemen have been in this business, these businesses, for many, many years, have been building successful careers in legal, insurance, technology, and all focused around something I hold near and dear to my heart, which is doing right by humans and building successful businesses in that vein, which we all share something really important to us, which is we're in the business of keeping businesses in business. And I think that's pretty cool. So I'm joined today, I'm going to go around the table, by Brad Crouse. Brad is the founder and president of his law firm, elegantly named Law Office of Bradley Gross, cybersecurity legal expert and law professor. So, Brad, thanks for having us today. Good to see you,
Good to
brother.
be here with you guys. Looking forward to this.
Yep, thank you. I'm also joined by my friend Paul Guthrie, co-founder and managing director of DataStream Cyber Insurance and also Envelop Insurance and so many other things. Paul, good to see you. Thank you for joining us.
Yep, pleasure to be here. Thank you, Dan, and all
Yep,
the other panelists. Yep.
yeah. And Mr. Stephen Schwartz, calling in from England today. Is that correct, Steve?
Yes, sir. Yes, sir. From
Nice.
my beautiful
So,
hotel room.
yeah, nice. What time is it there right now?
5 o'clock.
5 o'clock. Good. Not too late. Well, I appreciate you taking time to join us.
Of course.
Stephen has been involved in a lot of different insurance businesses and technology companies, most recently Safe Security. He's got some cool things in the hopper as well. Brings a wealth of experience around connecting cyber risk data, underwriting, and insurance strategy to the modern world. So thank you guys. I really kind of want to jump right into it. Gentlemen, when I'm thinking of the intersection of insurance, warranty, financial protection, technology, and how we support managed service providers, SMB. At the end of the day, I'm really thinking, about survival of a lot of these businesses and what has been changing in this world and who's doing it right. If more than 30% of SMBs are going out of business within 6 months of a major attack, how can we help? And by we, I mean technology companies, managed service providers, insurance companies, legal experts, right? The people on this panel and others. We're living in this world where it seems like there's a lot that we can do to help. I just want to start there, as we're going to cover a couple of things, but before we jump into some of these pain points, any as you think about 2026, what are a couple things that we can do to help in this world, make it a little bit more successful?
Who's
Brad,
starting? I'll
yeah,
start. Okay.
Brad, let me start with you. Yep.
I think that a lot of it is people feel almost paralyzed to do things because of fear of the unknown, and then they don't do anything. And then when something happens, you have your statistic that a good chunk of them close, right? Due to what could have been a very, very manageable predicament. My perspective is that SMBs and MSPs in general fear the complication of it all. They fear having good, solid agreements. They fear getting policies and warranties and so forth. They just think, oh, it's all, I don't understand it. And so I'll just take my chances. And then when something happens, it turns out, well, if you had a great agreement, if you had a warranty in place and so forth and a policy, this wouldn't have been such a big deal. So I guess my thought is, as we move into this year now, don't get paralyzed by fear. Okay. These things are manageable. Everything is manageable. It's doable with the people on this panel and others in the industry. Don't be paralyzed by fear. That's my message.
Love it. We can solve problems together. Got it.
That's
Thank you,
it.
Brad. Stephen?
Yeah, what I would say, I mean, I think, as we're going to get into the conversation here today on, on this shifting, capital stack, if you will, in terms of how we are able to manage and transfer cyber risk. When I think of 2026 and the future here, if I had to try to distill this to one sort of talking point and building off of Brad, particularly with the MSPs and service providers, let's move away from, that statement of you're covered, just that blanket statement of you're covered. And coming back to your point, Brad, on with respects to fear, right? Let's have the conversation around here's what we can prove, here's what we can respond to immediately, and here's what still requires insurance, right? Set expectations around evidence, not hope. And remember, clients don't sue because they got breached. They sue when they're surprised by what failed financially, right? So sell proof and response more so than peace of mind would be my takeaway.
I dig it. Evidence, not hope. I hear that. Thank you. We'll come.
And by the way, I'm just going to throw something on there because 100%, when you said they don't sue because they got breached, most, and by most, I don't mean 51%, I mean over 90% of the MSPs that we deal with that experience a breach, they don't end up getting sued. They don't. The ones that get sued are exactly like you just said, where there was a surprise. The client was surprised, the customer, right, didn't anticipate, had a mismanaged expectation. So I agree with you 100%.
We're coming back to that soon, Mr. Gross. Paul, over to you.
Yeah, I'd say for 2026, it's when it comes to the topics we're discussing, it's about coordination and realism. And I think that Brad, you're right to say people shouldn't be afraid and shouldn't make decisions based on fear. And I think there should similarly be a very real consideration of how powerful and pervasive attackers are and the types of risks that the companies do face. And we don't want people to be scared and we don't want them to cower. What we want people to do is kind of put the very realistic and very practical countermeasures in place to counter a real threat that's powerful, but also pretty predictable. And coordination, I'd say, because I think, I've spent a couple of years, probably 5 years in this specific ecosystem where we're seeking to connect insurance and technology to small businesses. And I am here as an insurance person, but I was a technology person before that. I'm kind of new to insurance. But I'd say that this ecosystem suffers from arm's length relationships and suffers from skepticism and misunderstanding. And it's not it's not a huge intellectual challenge in terms of how to bring everything together. I think it's really it's a relationship challenge and it's a translation challenge. And when we coordinate, we can create systems that work, but it requires a little bit of an understanding across different disciplines to understand why what we're proposing in this particular collaboration, for instance, why this works and why this is so powerful. And things, what the world is like, the world is not always intuitive. Anybody who's ever been an expert in anything knows that there's a lot of information. And then there's also a couple things where you're like, oh, that's not what I expected. I thought things would have been a little bit different, but they're not.
Especially in today's world.
Yeah.
Yeah, I hear coordination, teamwork, but I also hear there must be an earnest desire to learn and understand. And by the way, one of the reasons it resonates for me is I was sitting with my 10-year-old this morning before school, and she was refusing to learn about compounding fractions. And I wanted to learn less than she did because it just sucked. But I had to sit and patiently actually listen and think about it and go, all right, I'm going to spend the time because she's got to spend the time. It's like some of these things that we're talking about are hard, and you really have to go through it and then extend just a little bit further out there to others. Okay, cool. Well, I appreciate what's on the screen here. I think we're going to run through a lot of these things, what insurers actually require, how security insurance and operations must align, what the future brings or belongs to teams who can prove, right? Back to knowledge, evidence, not hope. Why cyber risk assumptions collapse during real incidents, right? What things we need in court cases or, how to avoid court cases. So good. I think we'll cover some of those things. Eric, you're more than welcome to kill that. I appreciate it. All right. So, Bradley, I want to come back to you. Maybe we can get real on some of this stuff, some horrors and some highlights. As you know, underwriters are not Santa Claus, right? With ransomware demands averaging, over 1 million. What we saw in 2025 in a couple of our ransomware cases, they weren't $1 million. For a lot of SMB, they were, hundreds of thousands of dollars. And some of
Yeah.
the business email compromise cases we
Mhm.
saw, a lot of them were 20, 30, $50,000, just higher frequency. So look, I'm really curious what you're seeing in some of these negligence claims or some of the rough and tough moments that you're facing with your clients.
Yeah.
What do you
So I'll tell you as far as ransomware claims are concerned, the number that's always thrown out is not always the number that you settle for. And now what we're finding is that they actually have call centers that negotiate these things. Ransomware, they become sophisticated as the Walmarts of the world. They have call centers where they'll negotiate. It is a burgeoning and somewhat getting larger and larger industry. So we have to be aware of it. We have to approach it as a very real possibility. And we're getting into the realm of almost probability in some cases, as opposed to possibility. So what we're seeing is that what MSPs and small businesses, and specifically service providers and so on, what they're experiencing is when these things happen, they're getting significant pushback because, like you said, the underwriters are not Santa Claus. They're not giving away money. Insurance companies are not in the business of giving away money. And they're getting pushback on nuances, okay, on nuances of the policy. And, where there's a gap between what SMBs believe they are receiving and what they are actually receiving. And that gap is not realized until something bad happens, okay? So, for example, give you an example. We were representing a managed service provider. They were providing services to a health care complex, actually. And the healthcare complex gets ransomwared. Okay. And managed service provider steps in, contains, quarantines, remediates the whole thing. Of course, lawsuits begin. And the healthcare provider sues the MSP. And they say breach of contract, negligence, okay? And specifically, the negligence was that, one, a breach occurred, which is nonsensical, but okay, a breach occurred. And then there was that your service failed to provide sufficient security for us. We relied on your service, it didn't, and it was a failure of industry standards and so on. Great. Business just sends it to their insurance, right? Because they have a cyber policy. You think it's over. It ain't over. Okay. What happens? What happens is the insurance company issues a reservation of rights notice. So this is this letter that they send out immediately saying, okay, thank you. We've received your claim. So wonderful. You've given it to us. Now here are 10 different things that we're reserving the right to not cover. All right. We're not going to cover it. And they basically denied coverage through that reservation of rights letter by saying that this was not a security failure. This was a service failure. You, MSP, appeared to have failed to provide a good service to the customer. So it was a service failure, not so much of a security failure. And services are covered under a tech E&O policy. You only had a cyber piracy policy. You only had your traditional cyber coverage. You didn't cover yourself for errors and omissions. We're not covering you at all. So they were actually drawing the distinction, right, between did you do something wrong or was there a security failure? And this is the type of situation that we see all the time. Now, I'll give you the quick 30-second prologue to that story. We stepped in and we argued successfully that this was not a service failure. Why? Because what we argued was that the incident occurred as a result of spyware installed on the system. The spyware was there for months, apparently, before it was recognized, but it was pulling passwords. It was pulling real passwords, not fictitious stuff. It was watching the passwords, and then when the time was right, hacker used those passwords to infiltrate the system. That's a security failure. It's not a service failure, that's a security failure. And they argued that there wasn't MFA in place. And then we argued, well, MFA is not yet necessarily an industry standard, and there are different types of MFA. The idea was that we threw enough up there to show that there was a duty to defend here. And you're not just going to treat your insurance policy as a warranty, right? Because you're not a warranty. You're an insurance policy. You're not a warranty that says security won't fail. And they ended up stepping in and defending. That's what they did. But the problem with all of this, okay, is that they needed a lawyer to step in. That's the issue, right? You need a lawyer to step in, because they could have easily turned around and said, well, we don't have a tech E&O policy. We only have a cyber policy. I see they're saying it was our fault. Maybe it was our fault. And if it weren't for a lawyer stepping in, they wouldn't have coverage. This is what we see in the industry. This is the type of issue.
And to your point, Brad, just to double click, right, that I think it's becoming increasingly blurry on the lines between tech E&O and cyber in this regard, right? Because you have an MSP or MSSP whose fiduciary responsibility is to manage X for the customer, but whether or not that's a security incident that then leads to a lack of availability, that they're then getting sued, coming back to that E&O, which really brings it back to kind of to your point on having the right awareness from the onset, right, across the value chain.
Right. Yeah.
This is where I want to jump back into evidence, not hope, right? Don't you have to be able to, doesn't every single MSP need to be able to demonstrate what was on and what they were doing to protect their client, right?
Mm-hmm.
Isn't that sort of job one? And we all work with our MSPs to be able to make sure that they can do that. I think all of us would argue that it's, basics. MFA is basic, right? Backup, basic, your RMM, kind of on and on. There's the foundational layer that allowed you to be successful in working to, protect this particular client.
Yep. Yeah. The answer is yes. There has to be awareness. They have to know what they're doing. They have to keep careful track of everything that's going on. And to the point, I don't know, should we address the chats, Dan? Like, I see the chats, like they're asking questions about this particular issue. They say one is this: get rid of the lawyers. By the way, I agree. Get rid of them. I hate lawyers. They cause problems. So you need to do things and be aware in your business so you don't have to call lawyers. That's one. Two, yes, at the time that this went down, MFA was not yet even implemented as a standard by Microsoft or Amazon. Now, of course, it is. But these are still evolving definitions, right? What is multi-factor? Yeah. There are a lot of different multi-factor standards and ways of doing it. The idea is that we had to throw up enough stuff to the insurance company to show that they had a duty to defend. Whether they were right or wrong at the end, whether there was negligence or not, didn't matter at that point. Do you have a duty to defend at this moment? And that's what we were trying to achieve. And I guess, and my point, of course, is that this is the environment we find ourselves in, right? Yep. Insurance companies are looking to deny, they're not looking to give away money.
I love that story, and I want to come with a counterpoint so that we can all learn here. So, Paul, I want to come to you, and I want to understand a bit more about how the sausage is made. When I have a fantasy about active underwriting, and part of that is how Cork operates, right? We work with all of our partners to aggregate all of their technologies, their cybersecurity stack, give them back that level of intelligence, and then we wrap it all up with financial protection. The goal of that is to work with cyber insurance, to work with Mr. Bradley Gross, right? Because I believe that fundamentally, right, when we operate as one with as much knowledge, right, then we're actually going to be able to stand up for all of our clients. Today, Cork is protecting 38,000 SMB customers, and it seems to be working out. And we do that with the insurance companies. So how are insurance companies, and obviously insurance companies are in business and they do pay out. And I have seen them. It just, and typically it's taking longer than, and in my business. So help me understand, help our attendees understand how it all works.
Yeah, sure. So, first of all, something, cyber insurance has been kind of the hottest area of insurance for the last 10 years. And I got involved in it around 2016. And before that, I come from a modeling and simulation background, but I'm sort of an economist and I spent a lot of time in aerospace and defense. The and what we set out to do was to really understand and model the ecosystem at a global level and to understand how we could predict for a random company or an arbitrary company what their losses were likely to be. That's sort of my background. The industry as a whole, the insurance industry, it struggles with certain types of mano a mano, like human risks. It is set up with a lot of actuarial mathematics that really thrives on having, 100 years or 50 years of loss experience in, automobiles or, weather or something like that. And so trying to understand how the threat landscape is changing and trying to understand how the technology base is changing in close to real time, those are real challenges for the insurance industry. And when you look at what's happening right now over the last 3 years, you see a lot of moving parts. One of the big moving parts is that the threat landscape is changing massively. And it changes in terms of the technologies and techniques that are used. And it also really varies in terms of the intensity of that attack landscape. And to be honest, people don't talk about all this all that much, but the attack landscape is mostly professional hackers from places like Russia, North Korea, China, who are endorsed by those states to create chaos in the US and other countries.
Agreed.
This is not a fat guy in a basement trying to mess with you. These are professional, highly operationalized, enemies of the U.S. that are attacking people. That's what most of it is. And they're very systematized, and they have a lot of technology. Yeah,
Yeah, these are businesses that have HR departments. These aren't dudes in hoodies, individuals, hanging
Got
out.
call centers.
that's right.
It's
Yeah,
as a service now.
yeah, and you can't hide from them because they scan you can scan the entire internet, in a day with the computing resources that they have. So there's no safety in being, a small company in Massachusetts or whatever. So everyone's subject to this. I'm also conscious that sometimes if I go to a conference and I talk about this, some people will think I sound like a lunatic or a conspiracy theorist when I talk about it. But actually, that is actually what's really happening. Yeah, and we have a lot of data on it. Yeah,
and I would argue a lot of our MSP clients, partners
yeah,
know this. The challenge is that a lot of the end user clients, the
agreed. Yeah,
architecture firms, the construction companies, the donut shops, they don't get that, right?
that's right.
And I think that's kind of the rub that collectively we face. But continue. Sorry.
Agreed. So what to simplify a lot of complex stuff, I think there's kind of two things that the insurance industry is really looking for here and is really struggling to get. The first thing is that the mathematics of insurance are just very different from the mathematics of how you would manage one particular company. So if you are a phenomenal security professional and you have like a dashboard of all the data that's on your system and you know how everything's set up, that's too much data for an insurer to know how to manage. And it's also data on one particular company. The mathematics of insurance is that your minimum portfolio is tens of thousands of companies or more. And so they're really needing to pick like small number of data points that have a high degree of leverage that help characterize that risk as like a good risk or a bad risk. So that's kind of piece one, like connecting insurance companies to the data that cybersecurity companies have is a challenge. It's not impossible. We need a very, very good data science team. And you also need to run a lot of experiments to kind of understand like what data is useful and what data is not. The other piece, which starts to get into being the other side of Brad's conversation, is that if you think of how car insurance works, which is pretty structured. You have everyone's licensed, everyone's behavior is kind of governed by the law. We have a lot of infrastructure that's, in the US, incredibly well maintained. you know, so you have a bunch of sober people that have learned to drive lessons in a very structured environment. And insurance there pretty much works. In cyber insurance, you have much more complex systems. You have customers that sometimes say that they're using these defenses, but they're not. You have companies that are filling out forms kind of incorrectly. You have just like a very complex environment where the insurance industry wants to be able to support these companies and support a structured risk, but that risk is so unstructured. And there is a lot of bad behavior on the customer side in the same way that there's bad behavior on the insurance side. Cyber falls into a type of insurance called specialty insurance. The center of that globally is really in London. That is a culture of service. I have been rejected for business plans at Lloyd's because they were too profitable, and because Lloyd says, listen, we're not here to run a hedge fund. We're here to pay claims and to be a good public servant. It is a culture of paying claims. Claims are the product of insurance, but there's definitely a need for the risk to be a little bit more structured and quantified, and for there to be good risk mitigation that's mapping to that. And insurance is getting way better at it. It's night and day since 7 years ago, but I think the insurance side of the world is still trying to figure out exactly how to do it. And furthermore, there's a very big gap between the best insurance firms that have invested heavily in technology and some of the more, quotidian firms who do other things and also put a little bit of money into cyber, but haven't brought in the experts to figure that out.
Oh, there's a lot to unpack there.
I'll stop talking, but
that was great.
Well, I don't want you to stop talking. You do have a question that just popped up in the chat. Happy to read it to you. It says, Paul, if threat actors are
I read it. Oh, sorry. You can read it for everybody. There is the answer to your question. If the actors are organized by cartels and sponsored by foreign states, is it plausible that we can get government funding to support risk mitigation, not just rules and laws? The answer to that is sort of. And there's a great book written by Richard Clarke. It's called The Fifth Domain. And he argues something quite interesting where he said, hey, if a foreign state fires a missile at JP Morgan's building in New York, we go to war with that state. So why is it that states are attacking JP Morgan every day and the US government says, you're on your own? And that was a policy decision that was made out of pure practicality. It's just not practical for governments to do the defense. It's just basically impossible for governments to defend against this. What the government could be doing is they could be much more aggressive about going after some of these attacker groups and trying to disrupt them. I think, not to get too inside baseball on the DoD, but the DoD is phenomenal at, offensive cyber operations. It's not as fashionable to do defensive cyber operations. I think they're a little bit behind on that. So there's just not as much cyber defense going on. And you can kind of look up how, I mentioned who our enemies are. You can kind of look up, in terms of cyber, you can look up how our posture towards those enemies have changed in the last couple of years. We've not been more aggressive about chasing them down. So the threat has gotten worse.
Stephen, I'm coming to you next, but Paul, I want to have a follow-up question because I feel like I could have 20 follow-up questions, honestly. Look, Brad gave us a very specific example that is probably fairly common, right? There's a lot of legacy pain that we come across when talking with partners. And the way I see it is that insurance companies in the cyber world are trying to get better, are trying to move into this world of addressing it. And it's just the speed at which we need that to happen isn't moving as fast as we want it to, right? We're on the front lines. Brad's on the front lines. Cork is on the front lines, right? And then who's really on the front lines is all of the partners that we work with, right? Who actually have the hardest job of supporting all of the clients who have to fill out those questionnaires, who have to honor and work with, like, whether together we're doing new cyber insurance quotes or we're coming up and doing reviews. As you think about 2026 and what's shifting this year, is there an opportunity for partners to look for, work with a couple companies that might be doing a better job than others? Or is there something that we should be paying attention to? That because some insurance companies, cyber insurance companies, are writing better risk or have a better understanding. Like, can you lead us to water based upon what you've been witnessing, Paul?
Oh, sorry, I thought that was to Stephen.
No, I'm coming to Stephen next, but this is
Yeah.
my follow-up to
Okay.
you, right? Like, as
Yeah.
I
So
want you to, based upon what you saw from, the kind of that pain from Brad.
yeah, so obviously this is a Cork webinar, and I'm saying what I'm going to say not because it's a Cork webinar, but for the antecedent reason, which is I love Cork, and so I'm working with Cork because I think they're a big part of the answer, but they're not, the only answer. I think what I've been looking for as somebody who is running an insurance company is when I look at the cybersecurity world, I see a lot of kind of like point solutions. I thought there might be a little bit more on the overall risk analytics side that I could attach to. What I expected to really emerge that has emerged is software that says, here's the holistic view of a risk of a particular company, and here are the configurations that are in place, and here's kind of the behavior of that company over time when it comes to the implementation of its cyber strategy. Something like that I could attach to as an insurer would be incredibly valuable, because I could issue policies to that through that company, and I could do that at a really low cost, because I don't have to have a lot of margin in there, because I know that those companies are going to be really well managed. And so that is the type of thing that I've been looking for. I set up DataStream as a subsidiary of Envelop Risk, the reinsurer, to say, like, hey, let's go partner with all the firms that are doing like a really good job in reducing risk, and we can create good products for those customers, of our partners, knowing that our partners are the risk mitigation layer there, and that allows us to underwrite with a lot of confidence. And it creates a feedback loop whereby over time we can get more data into our underwriting systems that continue to prove and continue to move the price down. Insurers are afraid of many things, but two things that they're afraid of that are really relevant here is, number one, unmodeled risk. So if you'll have a model that'll say a certain amount of, cars are going to crash, a certain amount of, whatever. But if all of a sudden, Godzilla shows up and destroys a bunch of cars, well, Godzilla wasn't in the model. And so now the model that was running on very fine margins means that the insurance company is going to lose a lot of money. The second thing that the insurance firms are really worried about is correlated risks. So it's like, it's fine if it's fine if you get attacked and an insurance has to come in and pay your risk. Like, insurers want to do that. They want you to tell all your friends, like, Envelop Risk saved my life, But what we don't want is if there was one attack that hit everybody, because these insurance policies are designed for like 1 or 2% of the companies to get attacked. But if like 40% get attacked because there's a massive nation state attack or whatever, that will wipe out the entire insurance company and actually like a lot of the market. And so it's those two things. It's like it's knowing that the risk is managed. It's being able to get a feedback loop on the data. And it's also knowing that there's kind of no correlation, because everything is so tightly managed. There's not going to be like a highly correlated event that's going to wipe out the whole book. Yeah, systemic event.
Okay, good. Thank you.
So this is kind of that's just another deeper level of saying, like, coordination between MSPs and Cork and insurance. It just leads to better outcomes for everybody.
Agreed.
Got it. Yep.
Yeah.
Appreciate it.
And
Steve,
I guess the final piece of that is that insurance really operates at scale. So they're fine at operating at low margins, but they want to get really, really big. So bringing the price down and capturing more of the market, that can kind of win for everybody.
got it.
Yeah,
I'm all for bringing the price down, but
yeah,
underneath it, I got to be able to tie all that data together down to the endpoint through my partners, down to the client
yeah.
level, to
Once
be able to
once
prove
it's
prove the
yeah,
honesty. Yep.
once it's structured and maintained, there's so much we can do, but it's all these crazy unknowns and
Yeah,
unknown
totally.
behavior.
Yeah,
Yeah,
we shine the light so that it's not about
yeah,
unknowns. It's got to
yeah.
be about what's happening there. So, Stephen, kind of over to you. Given all your experience at Safe Security, where you were the chief insurance officer, you were tying together technology and risk, right? Help bring this home. Help us understand the prediction ecosystem, right? And how we make
Hmm.
sense of this for our customers. How do we communicate these things for business owners who are more concerned about them taking care of their construction clients or their healthcare clients?
So there's a couple great points I'm going to try to pick up from Paul's context, right? And in my experience at Safe, most security tools are great at telling you what exists. Not all are good at telling you what will fail, right? And certainly what will be defensible after an incident.
Hmm.
And the insurance ecosystem doesn't need more dashboards, all right, or more scores, if you will. It needs signals that translate into claims relevant truth, right? Was MFA enforced everywhere or just configured? Were backups actually tested or just scheduled, right? And what became obvious and at Safe was that really the prediction only matters when it's grounded in operational behavior. Otherwise, it's really just a confidence score that collapses under pressure. And it's really difficult trying to connect the whole ecosystem through the traditional insurance ecosystem when you are a technology vendor, trying to share telemetry with a broker upstream to a carrier, when ultimately, the insurance industry, in my opinion, shouldn't be the arbitrators of solution or service provider efficacy, right? That's part of the opportunity here. And when I double click on that a bit, this notion of continuous validation isn't about doing more assessments. It's about removing more assumptions. Right? And I can't tell you how many times, especially with larger enterprise risks, that I would see these 100-page plus slide decks of organizations sharing so much sensitive information about their entire information architecture that an underwriter would have no idea how to make sense of, and even where to double click on a certain question. And when I think, and bringing it back really to the main sort of conversation here today, the you know the the opportunity to start embedding financial protection with the service providers who are the ones that are actually the closest to managing the risk, certainly when it materializes, is the opportunity in front of us, so long as it is properly aligned with the insurance ecosystem. Right. As I mentioned, insurers really shouldn't be deciding whether, well, let me take a step back. MSPs shouldn't be insurance brokers, but insurers shouldn't be deciding whether tools worked after the fact. To Brad's point earlier, that's the mismatch, right? So the opportunity that I've seen is embedding financial protection into these services, and that first dollar capital, right? That pre-funded response layer, which is sort of like a deductible buy down, that quickly puts dollars into the hands of the customer of X service provider or MSP who's actually managing the environment, right? And let the insurers do what they're good at. Absorb the tail risk, right? Then and the larger indemnity, components to it. Let the service providers handle where the risk first hits and where speed matters, especially right? For you take that subcontractor that has 3 employees, and and a security incident could be catastrophic to their business. What we're talking about here is, is what I believe, going to fundamentally reshape how capital is deployed in the cyber risk market, and really enable a much more sustainable ecosystem. We've talked a lot. There's been a lot of talk in the market, over the last two years or so on how it is a soft market. And and I sometimes question that: is it a soft market, or has it been truly a correction? Right, during COVID, the industry sort of assumed remote work, rapid cloud adoption would materially increase cyber losses. And therefore, we priced for the future with, 300% premium increases, but losses didn't really materialize at that scale. Right. So pricing is still adjusting to reality, and it's not competition that's really pushing prices down, and it's not losses that are pushing prices up. It's the same carriers, same capital, just recalibrating to turn out, recalibrating to what turned out to be lower incremental risk than what they had otherwise expected. But when I just, last point to double click on there, in my opinion, pricing accuracy here is not, a direct correlation to system health. Even if premiums are right, the operating model here is still broken. Insurance is being forced to validate controls after a failure. They're not funding resilience before it, right? And that's the gap where litigation, finger pointing, and surprises live, right? So, if risk may have been mismodeled, not mispriced, but the response architecture is still wrong. And what I love about this conversation and the solutions that we're bringing forth here is really shifting that dynamic, right? To again, enable what I believe is a much more sustainable insurance ecosystem, as well as value to the end customer at the end of the day.
Stephen, you just said a lot, and I like that. So I'm gonna drill into three things for us, okay? The first is speed matters. And
Mhm.
Brad, I'm gonna come back to you on this one as well. Right? So speed matters for our partners, speed matters to our clients, right? When there is an incident, speed matters. For Quark, when somebody hits a submit claim button or calls for us for help, that means that I am giving money to my partners to pay for incident response so that they can respond to the client, like respond to the claim, respond to the needs. I'm buying pizza, right? We are buying food. We are giving money to the end user client to pay for the cyber insurance deductible, right? Buy down that cost of doing that business over there because we all just want to go fast.
Mhm.
Pick up the phone and call Brad and know that Brad is available to support the MSP through the process of dealing with the client's claim, right?
Mhm.
So, Steve, when you think about speed, you brought it up.
Mhm.
That's not, I don't necessarily think about an insurance company moving quickly, right? So help us understand, where do we want to go slow in order through these processes in order to go fast later versus going fast now? What does this all look like?
Yeah, I love Dan. I know my analogy here, right? On when you think about brakes, right, on race cars, brakes are actually not meant to slow the car down, but meant to let the car go faster, right? The better brakes you have, the harder you can brake, and ultimately the faster that you can go. When I think about speed in this regard, especially for SMBs, speed in the case of response is truly the lifeblood of could be the lifeblood of whether that organization still exists. And the traditional indemnity-based insurance structure does not support that. A parametric structure or parametric-esque does. However, under a traditional under the cyber insurance context, there's still very few parametric insurance solutions that address, cyber risk more broadly versus certain elements of risk like system outage. Where I think, again, coming back to the conversation here, the opportunity is to embed that financial protection with the MSPs, as they can see sort of immediately when X goes wrong or a certain incident occurs, and the qualifying conditions for that, such that we can put money into the pockets of that customer, within a matter of days or a week, and it's like an if then statement, while and giving them, room then to respond to the incident, while the more traditional forensic process is getting kicked off with the indemnity based insurance policy, again with that notion where the warranty is sitting as like a deductible buy down, or that first layer of loss.
Yep, understood. Yeah, our SLA is that within an hour we're handing over a five or a $10,000 virtual credit
Mhm.
card to our partners. Like, yeah, we
You'd be
go.
lucky to get a response on a first notice of loss within 4 hours, right,
Yeah.
from an insurance company.
Brad, what are you seeing on speed?
Yeah, so I love the idea of speed because, and your concept of giving money quickly, because you're giving the money to the people who are the most qualified to handle the issue at hand, right? You're not throwing money at the problem, right? That's what insurance companies traditionally are not. They'll throw money at the problem, but if you don't apply it with accurate and the speed that you're talking about, MSPs will find themselves in a position of, yeah, I'll get recovery, but I need money to bring in a forensic team right now. I need to bring in, Tom and Mary and Joe right now, and I don't have the money to do that. So your method, Dan, of giving money quickly to the people who are best suited to engage is exactly what needs to be done. And I think that Stephen hit it exactly on the head, that the historic model of insurance companies is not set up for that, right? They're not set up to be, they're set up defensive, post, you know, post mortem kind of
I'll,
stuff.
I'll, I'll give you a counter argument to our own argument, though, which is to use Stephen's words of pricing accuracy, which is where I think the insurance companies have far more experience than I do, than we do, which is to understand the bigger picture, the tail risk. Stephen, I think you called it tail risk, the
Mhm.
larger risk. And,
Yep.
and so where I see them working with a company like Field Effect, for instance, right, to do a much deeper autopsy almost, right? To go in where you're taking weeks to months to work with a partner on a bit, especially we had one in 2025 that was over a $500,000 ransomware event, right? Where it was really in the insurance company's world. It was really taken out of the partner's world. And it was a whole another set of team. And so I do think that these things are working in conjunction very well, sometimes clunky on the handoff. But I feel like in 2026, 2027, we've got an obligation almost to figure out how to connect the hands together. Stephen, maybe you've got, and Paul, maybe you've got a perspective on how we bring these hands together.
I couldn't agree more, Dan, on bringing the hands together. What I've seen is there's still a decent amount of skepticism, but with curiosity. Skepticism without curiosity, not good. But from the traditional insurance ecosystem on understanding the warranty ecosystem, and that it is going to pay out, and again having that alignment between the two, which is part of the work for all of us here over the next couple of years. When I coming back to the comment on speed, when you think about all the data that the MSP is capturing in real time to validate, that claim on the warranty side, and how that could be served up to X insurer, to really help accelerate the forensic process. I think there's a tremendous opportunity, even in that aspect, which is a bit more indirect. But how can we shorten the forensic legal life cycle with the data validation, so on and so forth, that we're able to capture the MSPs in this process.
Team, I just
And the
saw.
alignment of limits, which Paul maybe can comment on. If we're taking on, whether it's a service or a solution provider who, somebody focused on anti-ransomware for argument's sake, and if they're taking on, up to the first $3 million of loss, if there's a successful ransomware incident, how does that impact the structure of the insurance policy? Right? Do we have a higher retention for that particular peril?
Yeah, I mean, the answer is yes. So just from a capital perspective and from a speed perspective, I'd agree that this hybrid model is incredibly effective to be able to bring capital to bear right away through a warranty is a huge service to companies. And also, I think insurance companies are surprised to hear that there's so much activity that's happening kind of in the warranty quanta, in kind of the space of the deductible. I think the insurance companies are much more aware of like the big crises. I suspect that there's a lot of underreporting in this space. And so it's just not in the models. And so having a warranty layer there, super valuable. That then allows a much more capital efficient insurance policy to be put on top of it, which is lower in cost to the customer because of that effective higher deductible. So it seems to structure very efficiently and work very well for everybody.
And we need proof, right? It hasn't helped us that the arguably the largest or one of the largest cybersecurity firms globally touts that they've never had to pay their warranty. And those of us who know that it's because the terms and conditions are very complex and it's designed not to pay. So that's why there is a bit of that skepticism. The work that we're doing here is changing that, right? And the irony is that we need incidents to prove, right, to prove this out and really get the proper alignment. But it's very rewarding to see that the market is listening, right, and wanting to engage and certainly what I'm seeing.
Yeah, we're in the business of showing up for people when they ask for help, not
Yeah.
in denying things.
Not just for marketing.
No, no, no. We have yet to deny a claim. That's not helpful for folks. So,
Well,
folks,
even that stat, Dan, that's huge, right? That's huge.
yeah, yeah,
That
donuts.
huge.
I love eating donuts, and I'm proud of the fact that we have
Mm.
donuts when it comes to claims denied. I want to be respectful of time, y'all. I just realized where we're at. And are there any other questions from the attendees for our esteemed panelists? Is there is there anything else coming in?
Like the active chat going on, though. A lot of other issues that we might want to pull from this chat and do another webinar
Uh,
on.
It's awesome. Yeah. We'll scrub this, hold it, and make sure we've got follow-up. It tells me that it's a meaningful discussion that's happening here.
For the panelists, question, what would brokers slash insurers say the number one reason for claim denials is?
What's the question? The number one reason that claims get denied?
Yeah, what would brokers slash insurers say the number one reason for claim denials is?
You guys have insights into that one?
Stephen, you'd be closer to
Um,
this than me.
yeah, I mean, certainly the most obvious one I would say is when there's a misrepresentation on the application, albeit the application-based approach is not the correct approach to truly understanding and managing this risk on an ongoing basis. And the questions are ambiguous. To Brad's point earlier, do you have MFA? Yes or no? That's designed to create that opportunity for a carrier to deny. But to Paul's point, carriers are not in the business of denying claims, right? They want to insure or they want to pay out claims. You just be truthful, right? It's when you start moving away from that truth and really that partnership is what I would say with your broker, with the carriers, that that problems ensue and then claims are not being paid, if you will.
I think there's one other. So I think, Stephen, we could maybe characterize this fairly on both sides by saying that, like, if you're a company and you get attacked and then your insurance denies you, that is one of the worst days of your life. And that is a very bad thing that shouldn't happen. And whether insurance companies are denying those claims based on technicalities or whether they're denying those claims based on having specifically asked if you had certain mitigations in place and then you didn't, well, those things are both true, and there are bad actors in the insurance community and there are bad actors in the SME community and whatever. So that's like something that needs to get closed. There's another thing that happens that's systemic as well, which is that there's a lot of policies that are written that are kind of called derogatorily like Sino policies, like they're sort of cyber and name only policies, and it's one of the biggest types of cyber policies out there. It's just very, very limited coverage for a very, very limited number of events.
Like an endorsement on a BOP.
Exactly. So that is insurance language for meaning like it's just kind of added in as a bonus almost for free on some other line of business. So there is kind of like an epidemic of companies thinking that they have cyber coverage, but they really don't. They really have this incredibly limited cyber coverage that was kind of never really intended to be anything significant. I don't have the percentages on how that contributes to the 74%, but those are some of the issues that are happening there.
And I think too, just, when you think about the relationship with your broker, right? There's a very big difference between your generalist, State Farm agent and somebody who only specializes in cyber insurance, right? It's just being a cyber broker underwriter is not an easy job, right? Trying to stay up with all things security, AI risk, plus, the changing landscape of insurance. And I see all the time, especially with SMBs, where the large majority of their exposure is digital, right? All their revenue is contingent upon online revenue. Yet they don't have a tech E&O or cyber insurance policy. Or to Paul's point, they have a $50,000 sublimit for PCI coverage, like PCI DSS fines on top of their business owner's policy. Right. And that's just improper advice from your broker and partners. And I think there's a lot of awareness that we can still as an industry drive throughout the market here.
Mm-hmm.
You bring up a great point. When I think of my farmers, homeowners insurance conversations versus working with data stream and talking about cybersecurity insurance and what actually needs to be covered and what's relevant for a business, those are two very different worlds. So
I've noticed, Dan, when if you need to get out of like a party quickly, just tell somebody you're in cybersecurity insurance, and they'll look at you like, what did you just say?
well, maybe I'll bring it home with this. We started at the top of the hour by thinking that together we can solve problems, right? The ostrich with the head up, asking questions, working together, evidence, not hope, right? Teamwork, collaboration will help us actually move the ball down the field. And you gentlemen have facilitated a great conversation here around some of these topics. So, to all of our attendees, thank you for joining us for this hour. Hopefully, we've been able to touch on a couple relevant topics for you. Please know that we exist to be of service to you. And so there's a couple ways you can find us all on LinkedIn or, obviously reach out to any of us at Cork and we're happy to connect you as well. So gentlemen, thank you so much for joining us today. It's been a pleasure to have you.
Thank you, Dan, and thanks to all the good questions and the participants.
Likewise. What a blast. We can go on for hours and hopefully we'll have some subsequent follow-up sessions here.
Sounds good. Peace. Be
See
well.
you soon.
Cheers, guys.
Cheers, everybody.
Bye.
Stay safe.